Hello, everyone out there in podcast world. Hope you're having a wonderful day. You're listening to or watching Service Business Mastery Podcast. I'm your host, Tersh Blissett. Today's episode, we have Josh Kim on the show, and we're going to talk about SBA loans and what it really a lot of different things. But right now, the government's really paying us to come get more money. So, as a small business owner, I think it's very wise to pay close attention to today's episode. And not only that, it's this time sensitive too. So let's just make sure that we're paying extra close attention to this. So with that being said, welcome to the show, Josh.
Thanks, Tersh. Thanks for having me on.
Yeah, man. So tell us a little bit about yourself, your background, and who you are, what you got to offer for us.
Yeah, so I have absolutely no home service direct experience myself. I've never owned a business in the home service space or whatnot, but my background is pretty interesting, and I offer a very unique perspective on SBA financing. I actually used SBA loans to go buy 3 different businesses before I turned 21. I bought 3 businesses in the home health and hospice world. And, through running this business, I definitely learned a lot. But I learned one of the key things I learned is I like just doing the financing. I like doing the financing and doing the deals more than I do necessarily running a business day to day. So I gladly accepted transitioning out of that space to go focus on more interesting opportunities. And one of the businesses I have now is a consultancy business. We work with existing business owners and prospective business owners that also want to do acquisitions. Basically just helping position them for being able to capitalize on the most amount of money they can get. A lot of business owners, they don't realize that going to do, one bank versus another bank, how you position your financials, and all these, small details can really have a big impact in the total approval amount you're going to get, and or whether you get approved at all. I mean, I've worked with plenty of business owners in lots of spaces. They're like, well, I tried going to this bank and that bank. They didn't get me any financing. So I just kind of gave up on it. And so, that's kind of one of the big myths we help dispel for people is not all banks are created equal. And so that's a little bit about me. I come from the, I've ate my own cooking, if you would. I've been there, I've done it. And the SBA world can seem very daunting. I mean, if you're a business owner who doesn't know much about the nuances of it, you look up about it and they're like, well, the SBA's SOP is 590 pages long. That's a lot of freaking rules I don't have time to learn. But yeah, I mean, that's a little bit about me. I used SBA loans myself, and, I have a business now where basically it's what we do full time. We help other business owners access it. And the reason I like SBA is, objectively speaking, it's really the best financing you can get out there. Really? You go to these merchant cash advance groups, these short-term line of credits, and they just have you bent over a barrel. I mean, they really do. The rates and the fees, they're exorbitant, and they're really not positioned. The loan products themselves are not positioned and set up to help the business owner. They're there to help the guy lending the money. Mm-hmm. So what's nice about SBA loans is that there's actually statutory caps on the interest rates, and the government put this program together to incentivize banks to lend money to small businesses, right? And small is kind of a relative term. If you've got less than 100 employees, you need up to $10 million. You're generally going to qualify by one or multiple of the SBA standards of small business. I've had some people like, well, I've got 50 trucks and I'm going to do 10 million this year. Do I still qualify? It's like, well, you only need $2 million. So yeah, you qualify. But that's a little bit about me and what we do. I recently went on a podcast. It's kind of how we got connected. I Tommy Mello's home service expert podcast. Got a huge amount of reception there from a podcast and a podcast experience in a Facebook group. So we've definitely been looking for more networking and more connecting with folks such as you guys in the home service space, because home service benefited from COVID in many ways. Most businesses we've been talking to are like, yeah, we took off. Business was up. Everyone's at home. They need the refrigerator fixed. They need this fixed. They need that fixed. So it's a good space that we're having a lot of fun helping people, because home service entrepreneurs, we've found, compared to some other industries, they move quickly. They're not sitting there twiddling their thumbs. They want something, they move on it. So quick executors, and the businesses are all very fundamentally solid. These are recession-proof businesses that banks like, because they know no matter what happens, COVID 2.0, COVID 3.0, people still need their AC to work. They still need their electricity to work. So
tell me this.
Home service isn't going anywhere.
Yeah, absolutely. No, absolutely not. Tell me this. for those who are listening or watching this and they don't know the difference, what is the difference in the SBA, the 7A and the 504 loan programs?
Yeah, so the 504 loan is one that is set up purely for real estate and like TI related stuff, so tenant improvements. So like if you already own a building, you want to get some improvement capital for it. 504 is great for it. It's good for buying buildings too. Mm-hmm. The rates on 504 for a real estate purchase are a little bit lower than a 7A loan. 7A, you can use it for anything. You can use it for a building purchase. You can use it to buy another company, buy out a partner, refinance debt, just get general growth capital for hiring new employees, buying new trucks, putting it into marketing, really whatever you need. So those are the two differences. A lot of people, they also kind of, they also have been asking, most people, they haven't done anything tied to the SBA until COVID happened because, everyone could get PPP, everyone could get EIDL. And so usually the big question we're answering for people is, what's the best loan program for me? 95% of the time, unless they're just there to go buy a building, 504 is 7A is the way to go. I mean, if you're looking at just buying a building, you don't need any other capital. I'd recommend, going 504, but 504 comes with a little bit more work to it because you have to get a bank involved. You have to get an SBA nonprofit entity called a CDC involved. You have to get them to do it. It's a longer time frame to close, but if you've got the time, go 504. 95% of the time, we just tell people go 7A. The rate difference for a piece of real estate is going to be minimally different.
Really? So how about the EIDL? I mean, if you can get that still, is it better to get that versus the 7A?
Yeah. So EIDL it does come with some strings. So you can't buy a building with it. You can't buy out a partner. You can't buy another company with it. They do technically have restrictions. I don't have it in front of me. I don't think you're supposed to be buying new trucks and expanding. Oh, okay. Usually EIDL is the whole point of it is, you went through a period of economic injury, use that money to cover accrued expenses or stuff that was attributed to that. There's really no way that they're ever going to be able to prove or track that, but just technically speaking, there's more strings with it around use of funds and stuff. You never want to run afoul of that. But we're working with plenty of business owners right now where we're helping them maximize both, right? We're going in and saying, okay, because the IRS is so backed up, that's the bottleneck right now for these EIDL applications, whether you got an initial one and you're going for an increase or you never got one and you're going for your initial one. The backlog is the IRS verifying tax return transcripts because that's part of the SBA's EIDL process to give people loans. So what we're doing with a lot of business owners right now is we're helping them get their 7A money. And at the same time, they've got the pan on the stove for the EIDL money that is going to come post 7A. So, they're getting $500K, $1 million of capital through 7A, and then they're going to be getting up to another $500,000 in the back end from EIDL. I tell people just, if you can get the EIDL, take it, because at the end of the day, 30-year term money, 3.75%, that's a mortgage on secured money. And if you're taking less than $200,000, you don't even have to personally guarantee it. So, worst case scenario, business falls to shit. I mean, you're technically not your company is liable for that, but you're not personally. You can just close up the corporation and, no liability from it. So, right. But yeah, that's the EIDL. If you haven't taken EIDL yet as a business owner, you're listening to this, I would encourage you to go out there, apply. The application portal is good through the end of the year.
Okay, cool. So Rob Hernandez, he's live on Facebook and asked the question. Is there a VA-backed SBA loan, and is the qualifying a little easier to get?
Yeah, so I know we're going to touch on it a little bit later. There's incentives available right now. The benefit you get of being a VA is that they waive the guarantee fee. If you go through the vet program, they'll waive the guarantee fee and they'll waive some of the other fees with it, which are, those can add up to 3.75% of the value of your loan, which, it's a lot, but with the current incentives from the CARES Act 2.0, which is really just programs they extended from CARES Act 1.0 for the 7A and 504 loans, you're going to get that anyway. So everyone's getting those benefits right now. The value that you're going to have being a vet going for a loan is if you go after these incentives drop off in October.
Okay. All right. Cool. So I'll let you dive in a little deeper. Josh, did you have anything? I know you.
Well, I actually had Tersh, you must be reading some people's minds. I had one of my clients ask me a question that you literally just asked right after that. So I was going to ask, so like the 7A and stuff, so business owners, there's certain like basic requirements they have to meet to even consider this as far as their business goes?
Yeah. So, a lot of people think that the qualifying criteria for SBA loans, it's like a very narrow road and only certain businesses and industry. Like it couldn't be further from the truth. I mean, they've made it so easy. I would argue everyone listening to the audience today is going to be eligible. If you operate as a for-profit business here in the United States and are incorporated as a for-profit entity, you're eligible. The SBA does have a couple of restrictions, like, if you run like a hard money lending business, they're not going to lend you money, right? Because they don't want you to be relending government money on risky stuff, right? So there's certain industries where they don't do that. I mean, you can't use an SBA loan to go buy a brothel. You can't use an SBA loan for, opening up a dispensary, because, at the end of the day, weed is still federally illegal, and SBA is a federal program. But,
that knocks me out of the ballpark.
Yeah, bummer. But
side business.
Well, it's funny. There are lenders who are finding ways to get involved in that space without directly touching, the forbidden stuff. So you can finance a building for, a place that does CBD extraction, packaging, branding, and shipping. Like, that's eligible. You just can't use it for a grow, a cultivation plant, whether it's indoors or outdoors, and you can't use it for if it's actually if a primary source of revenue from the business is selling products that are still considerably, not federally legal. So, but yeah, everyone in the audience here, they're here for home service. They're not here for, opening up a dispensary. So I'm not too worried about that.
They might be.
They might be. Who knows?
Right.
But side business.
After all the shortage and products and everything right now.
After all the headache.
Side business. Yeah, pretty much. But yeah, I mean, generally speaking, if you've got, the real qualifying criteria is that you've got to have at least like a 600 credit score. Which, it's not, it's interesting. Most of the guys in the home service realm, at least the ones that we've dealt with, the average credit score that we've run into is higher than some other industries, just because as a home service business owner, you've got to have good credit to go get trucks. You got to have good credit, so a lot more on top of it. I mean, you'd be surprised, like, some dentists and doctors we've dealt with, like it's a mess, but it's like, they're so busy and they're making so much money. It's just like, they forgot about that $250 a month payment for one thing for 3 months, and boom, that drops their credit score 150 points, like one small thing. But home service guys, everyone in the audience, you guys are on top of it, because you got to maintain that for stuff. So, that's the credit score requirement. And then really what it comes down to, a lot of people, they think it's some black box algorithm of, do I get money or not? All the bank is looking at really is, does your business generate enough cash flow to cover the debt service? That's all it comes down to. If your annual debt service is $100,000, they want to see that your business is making, after you pay yourself a living salary to cover all your personal expenses, they want to see at least 1.5, which means if your business nets 150 a year after you pay yourself a salary to cover your rent, your utilities, all your personal living expenses, send your kids to school and all that, and your proposed debt service is $100,000 a year, and you make 150, it's a good loan. That's really all it comes down to. Do you have good credit? Do you have operating experience with the business? And, is this a, something that'll float, right? Can the business support it? And then they're also just checking for reasonableness, right? I mean, if you run a home service business, you're like, well, I want to go get $350,000 so I can go buy a boat. They're going to tell you, sorry, you're not a boat. Yeah. I mean, I've seen people put boats on their business balance sheets to depreciate it. It's generally kind of sloppy, because it makes the business like, if you want to sell the business down the road, you got to explain that, and then it gets messy. Just don't fuck with the IRS.
So here's the thing: like, it sounds to me, I mean, obviously your books have to be in order too, and that can be a challenge, especially if you're a smaller company. As far as like just getting started and not really understanding your books, what's the time frame on needing to be in business for this to happen?
So there's technically no minimum. We had a guy. We had plenty of folks from Tommy's podcast. They started a business a year ago. One guy started his business in the middle of COVID, and he's going to do a huge amount of it. He put $2 million on the scoreboard last year, and he started in July. So I mean, he was on. He's going to do over that this year. $4 million annualized revenue. So it's less about how many years of business, and just how strong is the story, right? In his case, the home service realm that he's in, he's relying on, a lot of, it's like 50-50 commercial residential, but a lot of their commercial revenue is like long-term contracts, governments, municipalities, commercial entities that are giving them 3, 5, 10-year contracts to go do stuff. That's obviously a lot easier because that revenue is locked in, right? So the lenders are going to be looking at how solid is the business plan. There's no minimum, but I will say once you cross that 2 years of business, at being 2 years in business, it makes it a lot easier.
Gotcha. Cool. Yeah, that's the question that, I mean, just not knowing and never having, if you've never reached out to anybody like a score mentor or anything like that, I feel like a lot of people, business owners, they're just like, well, I don't know it seems like a very daunting task. Like, what would you say the time frame is? Because right now we're pretty slammed with it's the busiest time of year and it's hot and everything else. If you do air conditioning, plumbing, electrical, like most everybody's pretty slammed right now. But you said that this time it runs out like what is
2.5 months from now.
Yeah. So like
these incentives. So
from the time you apply for it or get awarded it, and what's the time frame of actually taking to get to award and get cash in the bank?
Yeah. So what I'll say is, I mean, a lot of the incentives, a lot of the bonuses, as long as you get approved before October 1st, you're good. So even if you don't close until later. And what I'd tell you is, I mean, if you came to me today and you had the 2 SBA forms filled out, you had all the financials on the business and the personal side, you had your business plan and your projections, which, I mean, those are pretty much all the documents you need to get a loan approved. I mean, part of it too depends on dollar amount. So the SBA has an expedited loan process for loans 350 and below. So if you need 350,000 or less, those can get done A to Z in 30 days. And we've had clients, A to Z 30 days. What I tell people is, they always want to know how long does it take, and I budget more closely to 60 days as an average because the holdup is almost never with the bank. That's the part they won't tell you. I'll tell you because I'm not the banker. I have the in between consulting business, so I tell you all the stuff that they won't tell you because they don't want to offend you. But 99% of the time, the holdups are on the borrower not getting stuff in on time. Because once you get the package to the bank, they get it through underwriting, and they approve it in like 10 days. You will have your approval letter, your final legally binding commitment to lend letter in 10 days. But with that letter is going to come a checklist. Here's the closing checklist. We need this, right? And that's usually where stuff takes a lot of time, is because people are busy. They're juggling a lot of stuff. We have a deal right now that the closing is delayed because the partner that they're buying out flew to South America. Can't be. Well, actually, no, wait, that's Tommy. Sorry, that's Tommy. Tommy's getting bought out of a business. Sorry. He's in South America right now. So the bank's like, hey, what's going on? And he's like, oh, sorry, I'm on vacation right now. Oops, so we'll throw him under the bus. I'm seeing him on Tuesday. He can punch me for it if he wants. But, more often than not, the delay is not with the bank. It's usually with either the buyer or the seller. If there is a seller involved, you're buying a piece of real estate, you're buying out a partner, buying another business, or just some other ancillary party of the deal, right? You need a landlord subordination waiver. You can't reach your landlord, or their corporate lawyer is gone. Just inevitably there's some sort of delay that comes up. So, that's kind of what I help with. I tell business owners ahead of time before they get that closing checklist, here are all the things that are probably going to be on that checklist. Let's start moving the ball now so that, all the balls can reach the finish line at the same time instead of one starting way later that is going to take this much time to get done, right? I tell people on average 30 to 60 days from start to finish is a reasonable time frame if you're on the ball. 60 to 90 if you are trying to juggle a lot of things and it's not a top priority.
So with that being said, what if you don't need the money, but you want to get in on this?
Well,
like,
what I mean?
I don't want to pass up the fact that I could have this information, like all of this, and knowing that I can be going into the slow season here soon. Like I want to make sure that I'm prepared, and but you've never. Like, especially that one company that's only been in business a year, like you may not understand or know what dips you're going to face in the slow season here. Yeah.
So I think one thing, like, I don't know if we've explicitly gone into it. I know I talked with you separately on it, but, just so for the audience understands, the 3 main incentives that are out there right now, if you get your loan approved before October 1st, one, they're going to pay the first 3 months of the loan for you. They'll subsidize basically up to $9,000 a month of your loan payment for 3 months, right? So if you go borrow $1 million, your payment's technically a little bit over 10 grand a month or whatever. So they cover 9 and you're out of pocket the $1,000 or $2,000 is there's the delta, right? So they pay the first 3 months of the loan for you. The second big benefit is they're waiving the guarantee fee. And I think we touched on this before because you were asking about I think Josh was asking about the vet thing. The guarantee fee is basically how the SBA doesn't lose a lot of money every year, right? They guarantee the majority of these loans and they charge an insurance premium on it called a guarantee fee. That fee gets remitted directly to the SBA. They pool it and they pay out the loans that go bad, right? That's how the SBA doesn't lose gobs and gobs of money every year. Fun fact, they actually operate at a surplus most years. The government division that's profitable, right? The one that deals with businesses. Who would have thought?
Right.
Well, it's them in the U.S. Trademark and Patent Office. They print a lot of money over there too.
Yeah.
Anyway, but so that guarantee fee waiver is worth like 3.5%. So just to give you math, if you go out and borrow $1 million right now, the benefits between just those two things are worth $62,000. 3 months of free payments, which is $27,000, and a 3.5% guarantee fee waiver, which is $35,000. So if you borrow $1 million right now, you're basically getting 6.2% of that in subsidies.
Wow.
The other
That's a nice benefit.
Yeah, the other benefit is one that's not as visible to the borrower. It's more a bank benefit. Instead of a normal 75% guarantee, they temporarily have increased that guarantee percentage to 90%. And so, to anyone who's not a finance, finance doesn't interest you that much outside of just getting money in the door for your business. What that means is, typically the bank is risking 25% of the loan. If they loan you $1 million, they have $250,000 of risk, right? It's actually less than that, but it's more complicated than it needs to be getting into that. But now it's basically they're only risking 10%. And so the way it works on the back end with the banks, they actually are basically just pool the government guaranteed portion. They sell it to investors and they get a premium on it. So basically the way it works at a 90% guarantee, they can't lose money. So, they're more inclined to do deals that they'd otherwise be on the fence about with that incentive. So, and the other thing too, Tommy and I are much of the same mindset with it. Pull out as much money as you can when you don't need it.
Yeah.
So that when you need it, it's there. Because we've got some guys that they just grew too fast. Like some guys that reached out to us after either from his Facebook group or his podcast, they reached out because they're like, hey, I need help with this now because I went from 3 million to 5 million last year and I'm on track to do 12 this year. And I don't have enough money to keep sustaining the growth. We're growing too fast. Right. And they're like, yeah, we should have probably started this process 60 days ago, but we didn't.
That's a struggle that I've dealt with, that pain point. And some people call it a growing pain or something to that effect, where it's like, okay, like now I have the calls coming in and I have the team members, but I don't have the vans coming in, and I can't pay, or maybe I have some vans, but now I have to come out of pocket to pay for van wraps, or I have to put inventory in these vans and, they're $15,000 per vehicle to do all of this inventory stuff. And like, you have to have that guy making money out in the field, sometimes. And Josh, Scoville, he mentioned a great question the other day, and that was how much money should you have before you bring on another technician? And that's a perfect example of this. Like, should you save money before you bring on another technician, or have the cash so that when you bring on that person, like have a loan excess money here and bring on another technician and then, fund that van until that person is making use of money. So yeah, absolutely. That cash flow, it's a huge pain point, especially if you do any kind of commercial work or anybody that is on like a lot
longer terms. Yeah. It's 60 to 90 day terms. It's you got to float it. Yeah, you got to float it. And that's the thing. It's like, that's where SBA loans are perfect for, because, unfortunately, a lot of people, I don't fault them for it. It's like, if you aren't aware of all the options, you just go to whatever's out there, and they get locked into these snowball effects of these high interest loans where it's like, hey, we're doing all this work, making this money on this project, but we're paying 2/3 of what our profits would have been to the freaking interest and fees on this MCA loan. And, a lot of people get caught up in that death cycle. Cause, after a certain point, the amount of it's not good. So that's where SBA comes in, is very convenient. I'm sure one of the questions the audience will ask you, what are typical rates and terms? Imagine you could lump all your debt in your business into a 10-year term at like 5.5% to 6%. What would that do? Like, whether it's, refinancing a bunch of trucks, refinancing a bunch of, just working capital loans, getting an extra $500,000 of cash just to go buy more vans and hire people. Like,
what rate did you say it was?
5.5% to 6% is what you're looking at for a regular 7A loan. If you're doing it for a building, it's obviously lower than that. But typical 7A loan is 5.5% to 6% right now. And
what's the normal term?
10 years. 10-year term.
10 years. Okay.
Yep. So you're going to get a far longer term than you would if you go to PayPal and get one of these, credit builders, or you go to, these Loan Depot online places where they'll give you sometimes they'll give you a reasonable rate, maybe like 10%, but it's like a 2-year term. And, what are you going to do? Yeah. What are you going to do with that?
10%. I mean, when you're figuring your prices, that could be net profit on some of your jobs. I mean, depending on people pricing things, but they definitely. So I get an email, after like 3 times a day. Bridge loan. If you're applying for EDIL or whatever, it's going to take however many months for that to come in. It might take 6 months for you to get your loan approved. Here's a bridge loan for that term period, and it like the rates. I mean, I couldn't imagine what that is.
25% floor.
Yeah, something like that. It's something.
It's because like the lenders also have to factor in, well, what if for whatever reason the funding runs out for EIDL, or they don't get the loan, or they, there's so many delays that we've seen for people with EIDL. Like they miss the email, like they get an email, you have 7 days to get us all these documents, and they can't get it in time. They're like, all right, well now you go back to the queue and you got to reapply and reopen it. And it's just like, it's so convoluted. So, but I mean, just back when we were saying, just pull out all the money you can when you don't need it. So you're sitting on it. And a lot of people, they might say, oh, well, I don't want to pay interest on money if I'm not using it. And it's like, all right, well, let's look at what inflation's doing. 6% relative to inflation. I mean, what was the inflation rate last year? Like, the government wants to say it was like 2%, 2.5%. It was probably more like double that. Like, let's be honest. Right. You look at how much money they printed last year. It was like, here's the total dollar supply, and then it goes like this, right? So I'm not an economist. I'll caveat that, but I understand how money works, and that doesn't work, right?
Josh, did you have another question?
I did. So actually, Josh Scoville was texting me. So he's got a lot of really good questions today. This goes back to the EIDL.
Okay.
He was asking about the expected time frame for distribution from the point of application submission to distribution. Is it similar to like the 7A?
I can't tell you. So the key difference between 7A and EIDL is the EIDL is being administered by the SBA. Okay. They literally went from like a 500-man government agency to really like the most impactful thing in the entire economy. I mean, without them being able to administrate PPP and IDL, like the economy would be in a lot rougher shape today, right? I mean, they had to move fast. So the problem is that they have never had to in-house deal with this much volume. And there's a reason that they basically farmed out the PPP stuff to the banks. And it's because the banks have existing infrastructure, staff, and people in place to administrate and like disperse. Everything going through EIDL right now, it's sand through an hourglass, right? And right now that crimp is the SBA because they had to hire a bunch of outside contractors. I can't tell you how long that takes. I've heard from people once they sign the loan documents, they're approved and all the documents been reviewed, between signing and getting the funds dropped in your bank account, it's 2 weeks, right? Up to 2 weeks. That's not usually where the delay is. The delay is like, hey, I've applied and I haven't heard back from anyone. Where's my application? Yeah. Right? And unfortunately, like everyone wants to complain and say the SBA is terrible, but it's like, you run a business. Let's do this analogy, okay? If you got 10,000 projects dropped on you that you had to take tomorrow, you would be running around with like a chicken with your head cut off because you got to figure out how to hire the people for it. You got to get the infrastructure for it, with the vans and all the inventory. It would be a nightmare, right? And then, you've got all these customers complaining, oh, you didn't get to me 2 days later. It's like, well, sorry, we couldn't. We got 10,000 projects dropped in our lap and we didn't have, we weren't prepared for that. That's really what happened. So
yeah, we applied for the EIDL and we were told that it could be 4 to 6 months.
Yeah.
We got word back.
Well, and I touched on it earlier. A lot of the bottleneck with it is actually not with the SBA, it's with the IRS, because part of the process is the SBA has to get a tax return transcript through a 4506, what they call a 4506T, which is now the 4506C. They updated it. And so basically you have to put your EIN down, that, and then you submit that to the SBA, and the SBA turns around to the IRS to get that done. So the SBA is kind of like sitting in line like, hey, when are we going to get this back? And they can't help you until that comes back because that's part of the process. So it's
what happens whenever so if you have you have K2, so you defer your taxes to September, whatever. and you had started out just recently, maybe a year, maybe 2 years old. So like, and you grew like the example you gave earlier. And it was like the most recent taxes you physically have a copy of, you didn't really have that much money on your taxes. You know what I mean? And then now it's like, now I'm doing 4 million this year. And they're like, yeah, bullshit. Because
it's tricky because so like the way that they have it, it's kind of a dumb formula in my opinion, because the SBA, they ask for the EIDL, they ask you, what is your revenue? What's your cost of goods sold?
Yeah.
The tax return transcript verification is more so to verify that the business exists. They're not as much looking at like if the numbers match up, but as long as it's like within reason, like, you didn't grow like 10 times in 1 year, you went from $1 million to 10 million the next year, like that they might say, okay. But the tax return transcript is more just to verify that the numbers are kind of ballpark in the same range, and also to verify that the business was in existence. Because a lot of people are like setting up fake LLCs and pulling new EINs, and they're applying for loans, and just bilking the system for hundreds of thousands of dollars at a time. So if not,
I mean, they're going to catch it eventually.
No, they're not. I know. So.
Right? That sucks. Cool, man. I added the link to your website there on the in the chat on Facebook. And is there somewhere else that we should send them? I know that we have a landing page that's going to be made up for whenever we're actually listening to the show on the podcast. But here right now, what's the best way to get in touch with you?
Yes, the best way to get in touch with me is just go book a call through our site. Just go click there. We're going to put up. We'll put up a custom landing page like you alluded to, that kind of covers Service Business Mastery Podcast and us, and you'll have a unique link. That way we'll be able to kind of better track where you're coming from. But otherwise, just go to the site, just schedule a call through our main link there. You can also just reach me directly, Josh at 7aaccelerator.com. We'll get you in touch with one of our consultants. They'll do a pre-screen call with you just to better understand your business, get the high level numbers figured out. And then, we'll be able to kind of tell you, hey, this is reasonable, this isn't reasonable. And then, we can get started with our process. I mean, we work pretty straightforward. We're here to basically help tell you all the things that the bank doesn't have time to tell you, the things the bank won't tell you. I have a lot of business acquisition deals and a lot of other deals for people where, ethically the bank can't tell them directly to go do something or change something, but they can tell me, right? Because I'm the intermediary consultant. So I can help tweak and soften up some of the language and sometimes the business plan or the projections. That way it'll be the most, palatable to the underwriting department, and they'll push it through without giving too much friction. Because, I've seen deals get killed because one guy says one dumb thing on a call with an underwriter, right? The business is solid, the plan is solid, everything. They say one dumb thing and that can't go to that bank. Now we got to go to another bank, right? Mm-hmm. So that's really where we come in now is we'll make sure that it's one smooth presentation. You get set up. And then, like I said, you get set up with the right bank to start. Because if you go to Chase, Bank of America, these big banks, they couldn't give a shit less about a small business. And so really the big key is you got to work with the ones that, know what you're doing. And Tersh, I know you and I have talked about possibly getting some money for your business. I mean, you're experiencing the growing pains. You grew 300% in 1 year. Yeah. And, you can't keep up now. That's the nice thing about the financing. Bigger guy, smaller guy, doesn't matter to us. Like, we have lenders that will cater to your size, your geography, your industry, and help you out. But yeah, Josh at 7aaccelerator.com. We'll have the link in the website below if you want to just go click through that to go book a call for us with us. But yeah, I mean, we're trying to get to the spot where we're helping 500 business owners a month get their SBA loans, and we've got a solid and rapidly growing team on the back end for us. And so, hey, maybe you'll be one of those 500 for this month for us, right?
There you go.
Reach out.
My job. You have any other questions about that?
No, this was great info. I think it was really timely too, because especially with certain industries, the summer's kind of peak season for a lot of things, and then it kind of dips down towards. So this is timely as far as getting the process started to getting your funds towards that time when you actually slow down.
Yeah. And like I said, if you just need some growth capital of like $350K and below, those can get done in 30 days. I mean, don't hesitate to reach out and get that process started. A lot of people think it's really daunting because they've never been through it before, but that's also what we're here to help you with. Like, we're going to tell you what you need, what you don't need, what to worry about, what not to worry about. Because 90% of the stuff that people worry about going through the SBA process, like, you just don't need to waste your energy worrying about it because it doesn't matter, right? So that's a lot of what the value is where we're providing too, is we're helping people understand what are, the least common denominators to get this done as soon as possible, and what can you just, poo-poo and not worry about. So
what would you say if we don't need cash flow right now? What would you say a magic number would be? Would you stay at 349 to try and get it knocked out in 30 days, or would you say?
Yeah, no, I've actually advised some people to do that because they're like, yeah, we're growing. There's not a super urgent need for capital. I'm like, okay, look, you're going to get the guarantee fee waiver. You're going to get 3 months of payments. Might as well take it now because you're going to need it 6 months down the road. Just pull it as general growth and working capital. The bank's not going to scrutinize too much. You do have to provide a breakdown on use of funds. You've got to give them kind of a breakdown of hey, 100 grand is going to go to marketing, 100 grand is going to go to new trucks and new equipment, 150 grand, and the rest is going to go to whatever. You got to give them a breakdown. But what I tell people, and I think what we mentioned before is, if don't be like one of these other guys who called us after Tommy's podcast. I tripled in size and I don't have enough money to go buy more vans, and we have all the that's the problem that a lot of people run into.
Yeah.
So you sit here, I don't need it today. Okay, well, what if you land some huge accounts and now they're sending you more volume that you can handle? You don't have enough cash to float the payroll of doubling, tripling your workforce. You don't have enough cash on hand to go buy all these trucks, all this equipment, all this inventory. It's a good problem to have, but wouldn't it be nice that if you had the money sitting there ready to go, so that when it comes, take it all down? Because otherwise, what are you left with? Lost opportunity cost. You got to turn down some of that business. How much would how much are you foregoing by not having that money available to execute on that business when it comes and lands in your lap? All right. So that's
if you get the loan right now, though, will it hurt you if you say you want to acquire another business in a year? Okay.
No. So we've got it's a good question. We actually have a couple guys. It's exactly what they're doing. It's one guy, he wants to buy his dad out of the business. This is the guy we got from Tommy's group. He wants to buy his dad out of the business, get another $300K growth capital for the company. And he's also looking at acquiring two of his competitors who are, smaller than him, but would be great because he can pick up their teams. He can pick up their footprint. And, what I tell people is we'll help as far as structuring that and putting it together for the bank. But it really doesn't, because at the end of the day, when you're buying another company, what are you buying with it? You're buying cash flow.
Right.
So that cash flow is going to be what floats the loan you borrow to buy the business, right? So it doesn't hurt you. It doesn't hurt to pull out some extra capital now. And plus, more often than not, the bank would like to see, how you're handling it, right? I have plenty of guys where we're going for 350 right now just to get some growth capital in the door because they want to get it done quickly. But they're like, I want to go borrow another $1 million or $2 million to go buy out another company or a building or whatever down the road. And what I tell them is it's easier for that banker to go back to the credit people and say, hey, let's give this guy more money. We gave him this loan a couple months ago. He's made 4 payments on time. Everything's good. It's a lot easier for you to go back and ask for more money from someone who's already made the commitment, underwrote your business. They know who you are. It's a lot easier because you have that relationship with them. So it's a good question.
That's a great point.
Yeah. So how about a line of credit? I don't want to dive into this rabbit hole too much, but would this essentially potentially replace a small line of credit that some people have? Or if they don't have a line of credit currently, should they get a line of credit instead of doing something like this?
So the way SBA stuff works is you can do it through line of credit. They have what is called SBA Express. And they do lines of credit, but banks generally don't like doing them because it's let's just give you a permanent working capital loan. We're just going to it's less work for them to manage. The interest rate is actually better for the business owner because it's actually lower. The lines of credit are actually a little bit higher. Okay. It's just, there's no point of going SBA Express with, just getting a regular 7A. But what I would say is, if you have a line of credit that you want to refinance into a permanent working capital, that's often something people do. They have, a bunch of smaller lines of credit, 25 grand from here, 50K from here. They're half tapped. The rates are higher. And they just want to consolidate it either from an administrative perspective and or from a rate perspective, right? Those rates are inevitably going to be higher than what are offered with SBA. So, I encourage people to just always have as much capital available to your business as you can. Mm-hmm. Don't limit yourself at all.
You take 5 different payments and then you combine it into one. Now you got one payment that's less than all 5 of them. And
it's, it boosts your cash flow, saves you an interest. And we're seeing a lot of people do that. They're trying to basically refinance their fleets into one payment because they're like, yeah, I'm tired of dealing with administration on 10, 20, 30, 50 truck loans and, every month loans and leases. Let's just consolidate it into one payment. So, yeah, I mean, just from the administrative hassle as well as just, rate and term, it's more favorable.
Cool, man.
Hey, Josh, I got one more question. Sorry. I have a question. So people are you finding that people that have applied or gotten EIDL funds are also applying for the 7A? And is there something they should really consider doing?
No, I wouldn't say don't do it because, at the end of the day, EIDL technically, even though they're much looser strings than restricted on PPP, you still have to abide by whatever stuff they set up. I mean, you can't buy a building with with EIDL, you can't buy out a partner. The only thing I would say is, folks that got their EIDL prior to going for 7A, the bank is generally not going to be as generous on general working capital because that's one of the uses you can use for, excuse me, just hanging up this phone here. Hold on.
What if you haven't gotten approved?
Can I give you a call later? All right. Sorry about that.
What if you haven't gotten approved for your EIDL yet, or you haven't
That's what we're doing. So we're basically setting it up because here's the thing, like the EIDL, the SBA people, they're not looking at, hey, you already have $350K of cash on hand from your SBA loan plus whatever you had before. You don't need this. They're like, hey, you applied, you had some economic injury. Here's a bunch of free money, right? And it's basically free money when you look at historical inflation, whatever, right? So what I encourage people is get your 7A prior to pulling your EIDL money. Because one, it's going to take a long time for the EIDL money to come through. You don't know when that's going to come through, if it's going to come through at all. In some cases, we're kind of getting up near the end of the year. I think as long as your application is before December 31st, you're good. But it might be like that's the last day to disperse loans. I think with how backlogged they are, that's not the case. But so to that question, I've been seeing a lot of people doing it in conjunction with it, but the bank will be more generous with giving you that growth and working capital loan if you haven't received your EIDL money yet, because they'll count that EIDL money against you. Like, well, you're sitting on a bunch of extra cash. If you say you need 500 and you have half of that from an EIDL loan, we're only going to give you 250 because you claim you need 500, right?
That's what I was wondering. So what happens if like you went for the full 500,000 on the EIDL and you haven't, they've said that you're going to get it, but you haven't actually filled out any paperwork. They haven't, like, none of that process has finished yet. They haven't come back with your tax stuff yet. Are you still good to get it, or at that point you've probably already gone too far?
No. I mean, unless the money has been deposited into your bank account, it doesn't show up on a balance sheet. Like, that's really what it comes down to. Unless you've signed that loan agreement and the money is in the bank, it doesn't come up on your balance sheet, and you don't have to tell the bank because you're not hiding anything. They might ask, did you apply for EIDL? Yeah, we applied, but we don't know if we're going to get that, right? Yeah. Mm-hmm. But nobody really knows. I mean, they might run into money set aside for this, but that's what I would say. Cool.
Man, I appreciate it. You've given us a ton of information. Anybody that has any questions, in the comment section, type in SBA. We'll get you connected with Josh and his team and get you a ton more information. Also, I put Josh's email address and a link to his website there in the show notes. If you have any questions, don't hesitate to reach out to him. Josh, you got anything you want to close off on that?
We should just go by last names.
Yeah. No, I think like I kind of preluded before we added like 6 more questions at the end. This is something that I think a lot of business owners should really, especially the home service industry. Home service industry is, I hate to say it's blown up, but I mean, it is all over the place. People record month this, record month that, record year, 300% over, like, equipment shortages. Imagine how having this working capital would have been to have this in, let's say, February, and you wanted to stock up on $200,000 worth of equipment, and your competitors couldn't do that. Just imagine what that would have done for your business. So always having this capital on hand, I think, is a huge benefit to your business.
Yeah. Game
changer for sure.
Yeah, and like Tersh and I said, you you might be good right now, but the thing is, you got no idea what's coming down the pipeline. It's always better to get the application process going now. You're not going to lose anything by applying now, getting the money a little bit earlier. I mean, they're going to pay the first 3 months of the loan for you. So if you get your loan now versus you get your loan later, you actually have to pay back less money, right? And they're waiving the fees. It's like now is, if 2 years ago someone told you, hey, the world's going to shut down for a year, and then the government's going to pay you as a business owner to go borrow money to grow your company and hire more people, you laugh at them and ask them what they're smoking. But like, here we are.
Yep. 100%. Cool, man. Well, thank you so much for coming on the show, and thank you so much for spending time and sharing everything with our audience, and being so willing to answer questions and spend so much time with us. Like I said before, if you have any questions, don't hesitate to reach out to Josh, his team. And thank you again for everybody that's listening to or watching this episode of the Service Business Mastery Podcast. It is a podcast focused on service business owners, managers, and technicians who are considering becoming business owners themselves. Our target with this show is to help answer some unasked questions, and I hope that we did that today. I know that I got some questions answered that I had no idea were even anything related to a question that I've had in the past. So I want to huge shout out to Josh and his team for helping us out with that, and for Tommy Mello. If you've never checked out his podcast, make sure you check it out. He's a great dude, has some great guests on there. With that being said, I hope you have a wonderful and safe week, and we talk again next time. See you.
Awesome. Thanks.
What's up? So one of the questions that I most often get from audience members like yourself is more information about how to learn more about running a business, just in general, the education side of things when it comes to the business world, the service business world. And I'm super excited to be able to share with you the opportunity to go to this awesome event in Las Vegas. If you are ready to take your contracting business to the next level, you got to attend this event. It's called EGIA Contractors University. It's their annual event. It's called Epic 2021. And it's one of the most highly anticipated educational events of the year for home service industry. Epic 2021 will take place over October 28th through 29th at Paris, Las Vegas. If you've never been, which I'm one of them, I'm super excited to go there. And I hear that it's amazing. Just this venue alone is really awesome. So the event is actually going to feature celebrity keynote speakers such as Damon John of Shark Tank, John Taffer of Bar Rescue. I'm sure you've seen the show, at least the previews of it, so you know who these guys are. And then also Captain Sully Sullenberger, his airline pilot from The Miracle on the Hudson, which was a really cool movie. If you haven't seen that, check it out. There'll be breakout sessions that are delivered by legendary industry experts, access to best-in-class product and service providers, dynamic networking opportunities, and an unforgettable evening party. You can even come and hang out with us on Media Row as we record Service Business Mastery Live. So if you ever wanted to be on the show, ever want to watch, just come hang out and chill with us on Media Row. You can also get $50 off registration if you use the code TERSH50 at epic2021event.com. Coupon code is TERSH50, and that's spelled TERSH, at epic2021event.com. You definitely do not want to miss this event. I look forward to seeing you there.